Okay guys, so welcome back to another webinar, week ahead webinar. Today we're going to be looking, of course, at the economic calendar for the week. Already going to be telling you that's not much happening this week, but there's definitely some things for Europe and US as well, where we're going to be analyzing throughout the webinar. So if you have any questions, as usual, seems like Sweets is learning a little bit of Portuguese there. Como vai, Luca? Como vai, Luca means how are you doing, Luca, or how are you? Yeah, I'm very well, Sweetie. Thanks for asking, man. Estou muito bem. That's how you say in Portuguese. Estou muito bem. Hope everyone here is good. Now, so as I was saying, so this week there's not much happening. All right, so we already start the Monday yesterday being a bank holiday on UK as well as a Memorial Day for US. After that, we only had the German business expectations, German current assessment, and the German IFO. All came in lower than what the consensus was expecting. And then today, Tuesday, we had the retail sales for Australia, 11:30 a.m. Came in lower than expected as well. I've made a video on that, a YouTube video. So if you haven't watched it yet, you can go to YouTube, go to ACY Securities. ACY Securities channel. We've just reached 8,000 subscribers, so that's very, very nice. So thanks for all of you that have subscribed to the channel, giving us thumbs up on the videos. That helps us to grow the channel, and we're very thankful for all of the support. Feels like that's not updated yet. All right, but anyway, that's okay. So coming back to the economic calendar, and then today, this is pretty much it for what we're gonna have. We had the Borgi, the Bank of Japan Core CPI, as we just saw it, 1.8% at the consensus was 2.2. So if we look at the USD JPY. Let's go for 1 hour. It is going up. So basically, still the market still very bullish here, as we can see after this big push down. Still have a lot of room to continue to go up, just for, you know, Japanese yen is very, very weak, and this inflation's number that we just got out doesn't help anything for strengthening the Japanese yen. But look, there's always possibilities for the market again, you know, to make a huge pullback down for Japanese yen. Japanese yen is a very tricky currency, so therefore I try to maintain myself a little bit away from that, just so you know, just so I don't get caught on situations like this one, or like this one here, even this one here as well. See, like less than a week, less than a week, in 7 days, we had 1, 2, 3 manipulations from the Bank of Japan for strengthening the currency. But it's always a money spent like for no reason, because we know that the market will come back slowly, but it will slowly but for sure. That's how they say for the Bank of Japan. I'm not saying it that the market will come back slowly and sure. I'm not saying that. I'm just saying that this is what usually they say, the other analysts, like the Bloomberg analyst, what's his name, David Krog, what's the other guy, Adrian as well from Algopolis have said once for me. Wilfred, do you want to talk something? It feels like you want to share something. No?
No, I'm okay.
Okay, oh good. So yeah, coming back for the economic calendar. So we saw the consensus being 2.2%. They predicting no changes, but it came in at 1.8%. Now, for Japan, 1.8% inflation is very low, actually, right? It's much lower than what the target was supposed to be. So they are having a deflationary effect into the economy. So they need inflation to go up so then they can hike the rates or they can maintain the rates in zero. Remember, after 52 years, the Bank of Japan, the BOJ, have increased the rates from negative to zero. All right, so from 0.10, they've increased it to zero. So ZIP means zero interest rates policy, and the NIRP means negative interest rates policy. Okay, so let me just get something here. Okay, all right. Oopsie, sorry. Oh yeah, there we go. It's sharing back again, isn't it? Yeah. Okay, so as I was saying, they need this number. Where's my pen? Here. They need this number to go up. So then the Japanese yen can strengthen it. But basically, this is not happening. Therefore, the Japanese yen is continuing to weaken and weaken and weaken. All right. It will be nice to see how the market will react in the coming months. Then after today, on today tonight, we're gonna have 11:30 the Buber from German giving us a speech, and then tomorrow we only have the German CPI at 10 p.m. That's a funny time, 10 p.m. I've never seen German CPI coming at 10 p.m. It's usually around like 4, 6 around that time. So, but anyways, we will have German CPI here at 10 p.m. expected to be higher the year-over-year May, and the month-over-month is expected to be lower. Okay. Now, what do I think about this? We're gonna have to look at the Europe CPI first. We're gonna have a look on soon, and then we can come back to this German CPI. But most probably because we had a lower manufacturing, a higher manufacturing and services PMI on German, most probably that inflation will actually pick up a little bit. I don't know if it will pick up 0.2%. That's quite a lot. Maybe 2.3%, or even 2.4 as expected, but nothing more than that, in my opinion. I'm making my analysis around 2.4. Seems like a good number. And then we have the month-over-month looking to be lower than what was actually the last month of April. Sorry, February. Yeah, April. So this one's going to be for May. Look, April, May. Yeah, that's correct. So this one I'm looking to go lower as well, just because we don't have a very good numbers for Europe. All right, so therefore German does count for a big part of Europe. Maybe we can see not going to see a big miss on this. Oh, thank you, Nancy. That's kind of you. So we're not going to see a big difference here on the economic calendar. All right. So that's what I am expecting. Oh, of course, and I forgot to say that these two things here will probably push the euro. All right. Okay. Then Thursday, we're going to have the GDP for Switzerland. We don't have anything on the year-over-year, and we do have quarter-over-quarter expected to be the same. And we have the GDP for US as well. This is going to be a big take, all right? It's going to be a big take on the market. The market feels like the market is waiting for this for quite a while already from US. Then on Friday, Stuart wants to join us. Then on Friday, we're going to have the Tokyo Core CPI, and we're going to have as well, most importantly, the Eurozone CPI, month-over-month and year-over-year, and we have GDP for Canada and Chicago PMI for May. All right, then on here, as soon as we have the German CPI, we probably going to get a very well understanding on how it's going to be the Europe CPI. And we can see that the year over year, it's very similar from Germany, okay, from German. So CPI year over year May, it's 2.5 from 2.4. And here is expected to be 2.4 from 2.2. So pretty much they're expecting an increase on inflation. All right, where is it? They're expecting an increase on inflation on the Eurozone. All right, basically German being accountant for that as well. I do think that this is possible, and if this actually happens, they will continue to push the euro dollar the currency euro up. All right, this is pretty much what I'm expecting for um the week. All right. What else? Yeah, and then Saturday we don't have anything. Anyone have questions on the economic calendar? I just want to know what Nancy gave it to me because that doesn't say anything in English. Look, I've just got a little candy, but I don't know what it says. Can anyone translate that for me? Yeah, this is what it says. If we have any Chinese here, please help me. Anyways, that looks good. I'm going to try it out later. Let's go for the charts. How's the trading week been, boys and girls? Good. Any news you want to talk to me? No? All right. First thing. That's good, sweetie. That's good. Look, one thing I need to make sure you guys understand is the market is very slow at this moment. All right, very, very slow. So maybe I'm going to give a little bit of education here first. So everyone can, where's my pen? So everyone can have some knowledge. We have basically two cycles of the market. All right, we have 0 and we have 1. All right, basically 0 means long or short, and we have 1 that means short or long. Okay, just depends if you switch those two, whatever. But I just want to show you that we have these two things in the market. I measured USD CHF with your device in line with my strategy. That's good, sweetie. That's what I want. Good man. Okay. So we only have two moves on the market, right? We either go up or we either go down. So long or short. Okay. At this moment, we are pretty much going up on euro dollar, but still going very sideways. All right, so we don't have much happening. And why do those things that happens quite often, like the middle of the month, the middle of the year in the month happens? It's because we don't have much news happening. Okay, so if we get the calendar that we had this month for the month of May, we had like a few things, but we don't had any huge news. Like of course we had the NFP, of course we had the CPIs, of course we had GDPs, but that was pretty much all. We didn't had anything else besides that. Okay, so therefore next month will be very, very crazy. With the month of June will be very, very crazy. Right at the first week already, when I'm gonna be back on next Tuesday, it's gonna be full of good things for us to talk about, and we can probably decide to see what we can possibly do in the market. But besides that, as I was saying, the market is very slow. So you need to understand that you don't have to take trades. All right. What I want to say by this is some people feel like they need that there is a sense of need to take those trades for them to make money. All right. But sometimes your strategy doesn't allow you to take a trade. It says, okay, this is a time of waiting. There's nothing to do. Remember, you know, like, how can I say that? How can I put this in a simple way? Pretty much, you don't have to take a trade every day. All right. If you want to, if your strategy have to, then you do it, but you don't have to, because the when the market is like this, you tend to get wrong the majority of the time, because you're going to be frustrated with yourself that you placed a trade and the market is not moving. Take for instance, let me show you euro pound here. Take for instance euro pound. Euro pound since 22nd of May. So basically a week already. It hasn't moved anywhere. All right, it's just basically on a consolidation. It haven't broke down yet, so that's good, and it's coming back now, but still haven't moved from a consolidation yet. And now I ask you, imagine if you have bought on top of here, or if you have bought here, then you see all of these going down and now coming back up again. If you're not mentally prepared, if you're not a swing trader, if you don't know what you're actually doing, then you're going to get frustrated. Okay. So therefore, I rather wait for the market to have some news, some volatility for me to trade, than stress myself and try to, you know, predict the next candle. If I can possibly say, like, predict the next candle, I rather would wait for me to predict the next whole month, so I can catch a good wave of the market, than only a small move on a 5-minute chart. Okay, remember, this is just me. If you like to trade predicting the next 5 minutes move, that's good. But one thing is that to make money, to be consistent, you need to understand that risk management is a crucial thing. I've talked already so many times about that. I want to get the euro-dollar chart again. I've talked about that so many times. But basically, we have a 1, 2, -1. We have a 1, 2, 1, 1. Oh, sorry. 2, 0, 1, 2, 1, 1, 2, 2, 1, 2, 3, and so on. Okay, so you have 1 to 1, 1 to 0, 1 to 1, 1 to 2, 1 to 3. Here is -1. Okay. So basically, risk management. Let me put risk management here. So basically, this is something you don't want. You don't want to risk 1% to get -1%. Of course, this is a loss, but this can happen. And make sure to manage well. Okay. A 1% to 0 happens as well. Basically, getting a 1% to break even. So basically, you place a trade here. So say you buy, the market goes up, you put the stop loss to break even, and then the market comes back, and then it gets you out of the break even. So you made $0. So you didn't make anything. So basically 1 to 0. 1 to 1 is good, but I've talked about so many times about 1.8. This being the gold ratio, like Fibonacci 61.8. I would say that 1.8 is a good number for managing positions. Like if you're long it or short it, risk 1% to get back 1.8%. All right, this would be how my trading system works. Okay, if I would give you a risk management tip, tip would be at least 1.8. So then you can cover the loss and costs of the trade that may happen in the future. So why not 1-to-1? Sometimes 1-to-1 can be tentative because it's basically you long here, and then you have your position, your stop loss right here. Oh, sorry. Your TP right here and your stop loss right here. So you have a 1-to-1 risk reward. So the market can just go up a little bit, and then you're going to get out from your TP. But remember, the market can go down as well. And then now you need 2 trades to be in profit, because the other trade will cover the loss of this one, and the other trade will actually make you the profit. But then if you lose the third trade, you're going to need the fourth. You need 4 trade then to cover the first, second, make the profit, and then second one. So when you have something like a 1.18, you're going to have something looking like, if you have a long position, you have here your long position, your stop loss here, your take profit down here. So you have much more room to get the TP than to get the stop loss. Okay. Now, if you get stopped out on something like that, on your next trade, you already pay your loss and still have a profit of 0.8%. So you're not going to need another 2 trades to recover your loss. You're only going to need another 1 trade to recover your loss and make some profit, because the 0.8, so basically you're going to be the one here. So the one here will have the cover the loss, and then the 0.8, all right, will make you the profit. Okay, remember, this is always in percentage. Some people like to trade with using how many lots should I trade. It's very hard to say how many lots should you trade. It just depends on your account balance. So go with percentage. That's how professional traders use. Okay. I know some people may be looking like, okay, but I'd rather trade with gold 0.10 lots, because it's very hard to find a good percentage on my account for gold. But then try to understand that 0.01, it's this much of gold. So you wouldn't need to be that much on your account. So then that it's sort of a percentage you trading off your account. If you want, I can discuss that later. If you guys want, I can discuss that later on the other, like on Thursday maybe. But for today, this is pretty much what I want to show. Now, let's go for some charts. Let me delete all of this. Let's go euro dollar. Okay, so euro dollar, that was a beautiful pullback actually. All right, that was a beautiful pullback. I thought this would be a little bit below here, a little bit like somewhere here or even here, but it didn't. It ended up stopping here. And if we look to the Fibonacci, it basically retraced 50% off the move. All right, so beautiful 50% retracement, and now coming back up. Look, there is chances of the market coming down, all right, but there is more chances of the market coming back higher to the 1.10 level that it's here. So if we look down there, 1.10, okay. So just bear in mind that yes, the market is going up, but there is a possibility of the market go down as well. So we had the break of this downtrend here. We come in to retrace it, and then now the next target, as soon as we break this stop here, we will have more confirmation. But the next target would probably be, sorry, that's not what I want. Fib retracement. Ah, that's not what I want as well. Where is this? Okay, base station. Okay, there you go. Okay, so the first target will probably be at 1.8, 1.9, 1.09772, and then the main target would be in 1.10883. This is just my technical analysis here, right? Nothing too crazy. Same goes for, let's say, for instance, of this one here. This move here happening as well. If you get the Fibonacci expansion, we can see that it reached it on here, and then retraced, and then reach it on here, and then retraced, and then the next target will be on here. That goes basically meet of or next two targets. So yes, there is a possibility of the market coming back down a bit, but I still believing on a higher market for euro dollar, maybe coming back down and continue to go up. If we break this top here, that's a very big probability of we going up in the next month. If I do this, yeah, that's better. Okay. Now, let's have a look in other markets. USD JPY. I've mentioned about USD JPY already. 170. It's a very big here. GBP USD. Okay. GBP USD, I thought it would be going down, but the cheeky didn't go down. It actually went up. Well, it did went down a bit, but like nothing. I remember I've told you guys that could be somewhere around here, but even though it didn't, it just broke the top again and continued to go down. It's very interesting because when I look to GBP/USD, I don't see something very clear as I'm looking at euro dollar, for instance. But we are on a very big resistance here. All right, so if we look down there, we've just reached this resistance. All right, if we look to the right, well, to the left, we've just reached this resistance. So therefore, the probability of this is slowing is very high. I don't think it will come back like all the way down here again. No, I'm not talking about these. It's just because it felt like he was giving up on the rally and was starting to go down, but feels like this is not actually happening. The data from UK, it's not that good. It's not that good. I don't know why the market is giving up for the US dollar. If we look to the US dollar, the US dollar is falling, and I just don't understand why is that. Because we had only one, CPI lower than what was actually expected. The market is now believing that all the CPIs, inflation has come to an end and everything, and then the market will continue to go down. But still, the market haven't saw yet how many data of the inflation have been higher already than what actually have been lower. In the last 6 months, we had 5 months of higher data, higher, like higher than what the consensus was expecting in inflation. Then we had lower. So we only had one lower pretty much in the last 5 months. That was last month. Sorry, in the last 6 months. That was last month. And we will most probably continue to have high inflation on the US just because we still continue to see stronger consumer confidence. We still to see stronger people spending money and more and more people spending credit on the credit cards. So it's very hard to see why the market is not believing on the US dollar. I want to talk to some friends and see what they think. I was talking to a few friends this morning, and they don't know as well why the market is not believing on the US dollar anymore. Anyways, So if we can see a push higher for the US dollar, that will probably drag down your dollar, drag down the pound dollar, and so on. But still, as we're looking at this is pretty much the inverse. If we, can I inverse it? I think I can. Oh yeah, there we go. This is pretty much euro dollar. Like if I can put another chart on top of it, maybe I can get it from here. Maybe. I can try to euro dollar, but I don't know if it's going to be the same. Oh yeah, there we go. So it's exactly the same chart. This is US dollar index and this is euro dollar. So the line is euro dollar and the candles are US dollar index. And we can see that it's not like a once in a life. It's exactly all the time have been exactly the same. Okay, so if we put down here, we can see there is some moves are exactly the same. Some moves has a little bit of discrepancy, but still, look at this. This is completely the same, isn't it? So let me take this off now. So if we look to the US dollar like this, there may be a possibility of this continue to drop. I mean drop because if this goes up, then the market goes down. If we just invert this KO again, we can see that this was the target I've had, and now what are you gonna say at the beginning? I found out, guys. What were you gonna say at the beginning? What do you mean I found out, guys? Did I say that? I can't remember now. If I can't remember, it wasn't something important. So now I'm curious to see what I was talking. Anyways, so I don't see any targets down here of my strategy. My strategy is always those boxes, and here was the first one, and we got hit. So it's very hard to see where the market could be dragging the US dollar now US dollar index. And then when we look to the euro dollar, if the market continues to drop, if the US dollar continues to drop and the real and the US treasury bonds continue to drop as well, especially the 10 and the 2 years, we can probably see euro dollar continue to go higher, escalating the situation. The first target was right here, was a beautiful, and now I'm looking to go even higher, maybe for the next target at 109,771, and they still have the 110. All right, I've mentioned already the 110 quite for a while. If you look to the daily chart, we're still in a consolidation, a very big consolidation though. But we will probably get there sooner than what we are expecting. All right, where is it? There we go. That's the 4-hour chart. So that's my analysis for euro dollar. Someone asked me to do CHF JPY. Look, CHF JPY, I believe, as the market is looking, there is chances of it continue to push higher. All right, just because we just had the release of the Bank of Japan CPI, as I was mentioning here, and it came lower than what the consensus was expecting, 2.2. It came at 1.8. So therefore, the chances are the continuation for the uptrend on CHF JPY. Okay, so we've just broke down this consolidation right now. Here, and the chances are for this to continue to break the top here, come maybe for retest and continue to go up. Now targets, it's very hard to, to see, oh, this is a target or this is not a target. But of course, my first target would just be this little box here. If we look to the 15 minutes, that's going to be a beautiful target actually. Yeah, that's a beautiful target right here. Okay, that's a beautiful target for me. Maybe if the market comes back below this area here, I could long it on my account. Long trade. Let's see if it's going to be a positive risk reward. Yeah, beautiful. 1.8. I can even extend it a little bit. Somewhere around that numbers. But this is just an idea for myself, not for you guys to follow, of course. But yeah, look, it looks good for me. It would just depends on your strategy. For my strategy is saying long, just because we still have a very strong CHF and a very weak Japanese yen, especially after the release when the Bank of Japan is expecting inflation to go higher and inflation goes down. So basically it's going the opposite of what the Bank of Japan is expecting. Therefore, the market will react negatively to that, and most probably we will continue to see a deflation of the Japanese yen and inclination for people looking to trade CHF Swiss francs. Okay, this is just my take. Now, moving on, NZD USD. I've mentioned that we would hit this target that we've just hit it. Maybe I'm looking to go for the 6,200 now. Okay, maybe looking to go for the 6,200 now. That's where the most of the areas of contacts we had. But the target have been reached. Okay, so the second target would be going down here and then down here. USD CAD, I've mentioned about the 35.84. Still have a bit of room to go. CAD JPY, I think I didn't mention anything. Yeah, I'm not looking to trade CAD JPY. Aussie dollar. Aussie dollar hit my target at the 67. All right, so 67 was my main target. And then I thought could potentially go to 66. But my main target right now is at 164. Okay. 64 back down here. I want this to go lower than 64. So then I can, my investments on US can go higher, because when we have like a weaker Australian dollar, then it's good for me when I get my money back from US. So it's just personal takes on that. That's my my life. Anyways, so moving to Aussie JPY, nothing. Aussie CAD, I haven't traded as well. CHF, I've just mentioned about it. Euro dollar, Euro Aussie. Euro Aussie, was looking to go down, as I mentioned last time. I think, first target would be somewhere around here, but still have room to go. And then after that, we have to check. But the market is on a very big downtrend here, back and forth. Feels like, yeah, still have a little bit more room to go on here. If you look to the box here, 50% should be already somewhere around there. Somewhere around there have been reached already. Yeah, so this one is invalidated now because it has been reached already. So most probably we will see Aussie going up then to somewhere around these areas here. So basically, maybe this was a break, retested, continuation to the uptrend. somewhere around here. It's going to be it's going to be good to see how the fundamentals will react for Aussie dollar. All right. Sorry, for the euro on tomorrow and next day. Because that will clarify a little bit of my questions on, okay, is the inflation going up or is the inflation going down? NZD CAD, no trades. Gold, I will be back there, and then this is just nothing. So US dollar index I've talked about already, and now gold. Okay, so what are you guys looking for gold? What are you guys trading gold? Is no one trading gold? Okay. What are you guys trading on gold? Are you guys long? Are you guys short? How is that going? Hmm. Look, this is how it looks like. If anyone was interested to see how it looks like, that's how it looks like. That's interesting. Okay. That's good, Stuart. That's good. So Bernard is sending me a message on direct message, but he's saying that it's long on euro dollar. Long gold buying. Oh wow, everyone is trading gold. That's good. So yeah, I was long on euro dollar. Sorry, I was long on gold as well last week, and then I've closed it out my position mainly because I was losing money and it got stopped out. But then I was talking to Peter, and that looks like a good short to gold. I was on the long boat of gold as well, but when I looked at this beauty here, I feel like I can't not trade this little down move here. Okay, this big move here that did just happened, I wasn't prepared for that. To be very honest with you guys, I was like, okay, there is a possibility of that happen, but there is much more possibility for this to continue to go up than to go down. But then I remember, oh, yeah, true. Every time gold reaches a all-time high, it retraces. So that was the all-time high. It retraced it. All right. Last one. Let me put in a daily time frame. Oh no, daily time frame. Oh, that's not what I want. Sorry. Daily time frame. Yep. So every time it reaches the all-time high, we can see here, all-time high, retrace it back, all-time high, retrace it back, and then all-time high, retrace it, no, yeah, all-time high, retrace it back, and then here, all-time high, it's retracing back. Look, it's very hard. If you want to know about gold, I highly recommend you to watch this podcast. All right, because Adrian is an expert on gold, and I'm gonna send the link on the description on the comments. And we were just talking about gold for the entirely podcast. So you can actually come here and have a look on that later. There's lots and lots of nice things, nice charts for you to have a look. And Adrian perspective on what he's waiting and expecting. Oh, sorry, I've sent a direct message. Let me go again. There we go. So everyone is in there now. His perspective on gold and what he's looking to trade to gold. He was looking to trade gold until $3,000 and 200. So yes, this is, oh, okay, let me go for, oh, that's not what I want. That's not what I want. No, no, no. Let's go again. Oh, okay, this is a 4 hours. Okay, that's good then. Yeah, so he's looking to $3,200 until the end of the year. So if we put in a daily chart, yeah, that's better. I thought I was like, oh, what? Yeah, but anyways, yeah, $3,200, somewhere around that area. He's looking to it. All right, he's have a position right here, guys. Can you imagine that? That's already 20% up, 15% up. It was 20 last week. Anyways, so this is it for me on gold. I do expect a little pullback, like here, and then we see how we go from there. All right, but pretty much that would be the first thing. EuroCAD, I've talked about EuroCAD tonight. No, I didn't. Yeah, EuroCAD is look again it's a very strange market, EuroCAD. I'm not willing to trade that market because most of the times it's just ranging. I would rather trade Euro Aussie than EuroCAD. Because Canadian dollar, it's a very bouncy market, right? It doesn't go anywhere. If you back it up with the US dollar, it's just like that for years now. You know, it goes sideways. It's funny because it goes up in sideways, okay? And then it goes down in sideways as well. So the market is very tricky there. I would rather trade euro dollar, pound dollar, gold, or even Aussie dollar, all right, than euro can. But this is just my take. So do you think US dollar could fall below 104.2? 104.2. Let me check where this is. 104.2. Yeah, I do think that it could fall below that level. Yeah. Actually there is a sort of a target down here, but then I don't want to be too pessimistic, but if we look to the 103 mark, that's somewhere relevant to the market, and we can sort of look for the market to touch on that. But I feel like I'm being very pessimistic then, and I don't want to be pessimistic. I just want to trade what it was supposed to trade in, but it's a very big target in for the US dollar move. Sorry, and for the US dollar index to move that much, it's a big move. It's a big move. All right, so let's see how the news will react. Let's see what we're gonna get from the data, and then we go from there. All right. So this is pretty much it. This week we don't have anything else. It's going to be a very boring week. Next week we're going to start to have something. You know, we're going to start to have some interesting things. Do you guys have any questions? I think I've answered everyone's questions already, didn't you? It's good. Everyone interacting. That's awesome. All right, no questions. So thank you so much for coming today. I hope everyone have a lovely week ahead, and we catch up on Thursday. All right, don't miss on Thursday. Let's have a chat again. Let's discuss some ideas. As I've mentioned, don't have much. I don't want to be talking only, you know, just to talk. I want to give you out some content. So I've gave you out the risk management. I gave you what I think about the 1.1, 1.2 trades. Looked at euro dollar, looked at gold, looked at euro CAD, euro Aussie, CHF JPY, and so on. All right, guys, have all a great week ahead, and I'll catch up with you all on this Thursday. See you. Bye-bye.